Welcome back, everyone, to another episode on Living Your Greatness. This is your host, Ben Mumme. And the goal of my show is really simple: to learn from those who master their craft of what they do. If you are new to my show, please be sure to hit that subscribe button. So today we have a new guest to the show, and his name is Christopher Aaron. He is the founder of iGold Advisor and Elite Private Placements. So without further ado, welcome to the show, Chris.
Ben, thank you so much for having me.
Well, Chris, it's great to have you here because we met Ashley, a couple months earlier in Vancouver. Let's kind of start with your origin story. What inspired you to take a career transition from being with an intelligence analyst with the CIA and then switching that focus to eventually financial markets?
Yeah, thank you, for the opportunity to share a little bit. If I could actually go back just a few decades here, I would say my original inspiration, it's related. My time working in the military world is related to what I'm doing now. When I was 18, when I was applying to go to college, the essay on my entrance paperwork said, "What work of art has most impacted your life at this point?" I'm an 18-year-old guy. I was into sports, hanging out with my friends, that kind of thing. I'm like, what are you talking about? Work of art, I don't care about art. So, but I really had to go back into my memory and think about something. And the movie that came out right when I was applying for college was Saving Private Ryan. Have you seen that one by Spielberg with Tom Hanks?
I have. It's a great movie.
Okay. So my grandfather fought in World War II in Europe. And when he came back, he was shell shocked. His hand shook like that. He was hard of hearing in one ear. And he would never talk to me about the war growing up. He died when I was 15. He would never talk to me about the war. So I had to learn a lot about it through school and through speaking to my father and my uncles who saw him after and before he went to the war. But I always grew up with this sense that I wish I had the opportunity to fight the good fight in the way that my grandfather did in World War II. And when I saw Saving Private Ryan, yes, I know it was a movie, but as an 18-year-old kid at the time, it gave me the sense of this is something akin to what my grandfather experienced, since he would never speak to me about it. So, I was in college during September 11th. I was a junior in university. Um, and so I was very impressionable at the time when the attacks on the World Trade Centers happened in 2001. And when that happened, and all of a sudden, we were united as a country, united as a world to need to protect ourselves and stop these terrorists. I said to myself, this is my opportunity to do something in the honor of my grandfather in the way that he fought the good fight in his generation. This is my opportunity. So I was in college. I still had a year and a half left. I did not want to enlist in the military per se, but I wanted to go fight the war. I wanted to help protect the United States and protect the world from terrorism. So I applied for one of the military intelligence agencies in Washington, D.C., that was basically a combat support role. I got the job. I was extremely excited about it. I had to wait 2 years for my top secret security clearance to go through. When I started the job, after about a year, there was an opening at the CIA, and I applied to do a lateral transition to one of the programs that they had there, which was going to be working with the drone program. And these drones were being used in Afghanistan and Iraq in the mid 2000s to conduct the war. So I volunteered to go overseas and to fight the war in, again, in that honor of my grandfather and wanting to do something in the period of time that I was living that I felt would matter in the big scheme of things. Um, I did two deployments overseas, 2006 and 2009, and I had my eyes really opened for me. Um, what I was being told on the news and by our very own government and military leaders was not what I was observing with my own two eyes. And, this is a theme that I'll come back to a couple of times. It relates to the markets. I'm just giving you a little bit of a background about why I made this transition. And so by 2009, I mean, I had my career ready on a silver platter. I mean, I could have moved up that military intelligence ladder. I had all sorts of offers from contractors for big bucks, and I could have rode that train to, retirement very easily. But as I was preparing for my third deployment in 2010, uh, I basically was incapable of signing the contract. I literally had the contract in front of me on the table, and I could not sign it. My hands were shaking. I could not. I was sweating. I felt sick. And, it was this other side of me, call it the higher self or some sort of higher intelligence that was guiding me to say, look, you're not here on planet Earth to be fighting wars for the rest of your life. Um, and I didn't know what I was going to do at the time, but I was fortunate that in my first several deployments in Afghanistan is actually that coincided with when I started to pay attention to the precious metals markets. I started to observe that the relationship between us fighting these wars, which in my observation, again, based on being on the ground, I was technically a DoD civilian working for the intelligence agencies, but I had a gun with me. We were exposed to rocket fire, mortar fire. We were often hiding out in bunkers as shells were going off. I lived, I worked, I slept in the same barracks as the soldiers. Um, I was fortunate in that I was able to piece together how these unwinnable wars that I was participating in were related to the inflation and the debt and the waste of resources that was happening around the world. And when I came back, fast forward a few years later, I was fortunate to be able to arrive at the precious metals markets and say, these markets are things that I believe in from a fundamental truth kind of standpoint. And why don't I shift my entire life to now analyzing these markets as opposed to fighting these wars? Even though I went into the wars with a patriotic sense of wanting to help the world, again, it's about direct observational experience. Not what are you being told from the news, not what are you being told from even the government, but what are you actually observing as a human being on planet Earth? And what I was observing in the wars was not something that I could continue with.
What were some other examples of false truth information that maybe like the mainstream media was portraying that you actually knew to believe that was actually false?
Whether we want to talk about the wars or economics, I mean, there's so many related aspects, but in the war, I was just directly observing, for example, from 2006, my first deployment, there was then about a year and a half, 2 year gap in there. And my second deployment was 2008 into 2009. And it was an example in 2006, when I landed in Afghanistan, I had Thanksgiving dinner at Kandahar Airfield, which is in the southern, Kandahar is the southern province of Afghanistan. It borders Iran down on that side. I had Thanksgiving dinner with the soldiers in a quasi abandoned airfield. Uh, and they shipped in whatever they could ship in. And we had, a couple moments of peace. And then we went on with the rest of our work. Fast forward 2 years later, we had lost control of the entire province of Kandahar. So here we are fighting this war, pumping trillions of dollars into this thing. And I couldn't even go back to the place where I was 2 years earlier. The Taliban had regained control of that entire southern province. That was 2009. We stayed in Afghanistan for 11 more years. The writing was on the wall to me in 2009, based on my own observations. We were losing control of provinces that we had control over. As a 29-year-old at the time, I said to myself, this is going in the wrong direction. We're pumping trillions of dollars into this thing. We're destroying life on both sides of the conflict, both U.S. soldiers who were dying, and of course the people of Afghanistan who were dying. Uh, and we're actually not making progress. We're actually losing control of areas of the country that we formerly had control over. So that was one huge example. And if you think about it, so it took the government and the politicians 11 more years after I observed the regression, took them 11 more years to actually change the direction that our country was moving in. I think that's a huge example.
So knowing that information, what lessons maybe do you think from going to these two wars, in terms of shaping your perspective on global economics as well as geopolitics?
I think the biggest one is trust no one other than your own direct felt experience, your own observed experience about the world. We are all sovereign human beings here on planet Earth, and we have these eyes and these ears and these senses. And I think far too often we are prone to sort of release our capacities to higher authorities. Uh, and I think we need to be sovereign individuals while we're alive here, and really arrive at conclusions ourselves. And so if I could make the transition for a moment to how that military world then impacted my role now as an investor and as a publisher of research, um, in that period of time of 2008, 2009, concurrent with the wars, the global financial crisis was happening at the same time. So we had all these banks going under, we had all these mortgage lenders going under, Citibank, Wells Fargo, AIG went under, Wachovia, Fannie Mac, Freddie Mac, Fannie Mae, all these mortgage lenders in the United States. And of course, what happened? The Federal Reserve stepped in and printed trillions of more dollars and said, we're going to bail out the entire system. And I said to myself, wait a minute, who is this? Who is this Fed? I remember at the time being 27, 28. What is this Fed? Everyone's always talking about this Fed coming in. Oh, don't worry, the Fed's gonna prop up the system. The Fed won't let them go under. It was like everyone's a little bit too obsessed with this Fed here. And I just started to read about the Federal Reserve and the origin of the Federal Reserve, which is something that is never taught to us in high school or college or university. I did a minor in economics and I was a major in history in college. And we were never taught about the history of currency or, the way that the Federal Reserve was founded, the fact that there were two central banks in the United States before the Federal Reserve, both of which were abolished by politicians in the 1800s. And then the third time around came in 1913, and they did the same thing. And we still have this third one with us right now. Maybe not for too much longer, hopefully. Um, but I just began to say to myself, if I could be so deceived by the politicians and the mainstream media about the war, the progress in the war or the lack thereof, what other major aspects of our lives here as Americans or citizens of planet Earth am I not being told the full story on? And when one really starts to peel back the layers and then look into the rabbit hole of central banking and the history of this type of institution, it's just astounding. Um, you know, and so I reached this point of saying, wow, this is a major theme that probably not one out of 100 people in the United States or in the Western world really grasp how this system is functioning. And so therefore there's an opportunity.
When we think about how, you study literally economics, there's a lot of things that then you learn later. Some of them you've already spoken about that like school didn't teach you. What are other things that you realized with time you were not taught?
Okay, so then I'm going to take the story and kind of twist it back a little bit. So the next major lesson for me as far as needing to observe things with my own eyes, even then relates to the precious metals, which again is a theme that I truly believe in. I think the Federal Reserve should be abolished. I think all central banks should be abolished. You know, our country, the world went through the Industrial Revolution all without a central bank. We do not need a central bank in order to raise up the standard of living and improve our lives. Um, However, that said, within that theme, one of these things that I had to learn through trial and error was that uh, there are going to be major counter trends even within a valid theme. So even within a theme of debasement of currency, or a Federal Reserve that really represents special interest groups, connected banks and institutions, that is their ultimate reason for existence. Um, Even within that theme, it is not enough to simply say that therefore the US dollar and all fiat currencies are going to be losing value every single year going forward. Even though that may be true on a, let's say, a generational or a century long perspective, there can be distinct periods of counter trend where, let's say, the US dollar is actually going to gain value versus other currencies, or let's say even the price of gold is going to decline in US dollar terms. And this is something that I really had to grasp. So again, it goes back to this period around 2008. I was being hit from so many different sides with all this information. I was literally in the war. I was fighting the war at the same time as the crash of 2008 was happening on the financial side. And so there I am, sitting on the runway of Bagram Air Force Base, uh, doing the intelligence analysis on one side, and then on the other side, checking in to see how much the stock market was crashing every day, what was happening to the price of gold, trying to put all that together. And what I learned um, is that one can be right on these fundamentals, that the Federal Reserve and these central banks are going to print more money. They are going to prop up some of the unsound institutions that are favored around the world. However, that doesn't necessarily mean that the price of gold or the price of any asset is going to continue increasing in a straight line. And so, for example, in the crash of 2008, um, price of silver actually fell in greater percentage terms than the overall equity markets, the overall stock markets. And I saw this with my own eyes, and I lived through this. And I said to myself, okay, so it's not enough to understand these big picture themes. We actually have to pay attention to what is happening day to day or month to month in the markets themselves, and specifically with the price action of the markets themselves. And so paying attention to the trends in the price, if the trend of the price is slowly ticking up week over week, month over month, and then all of a sudden that trend breaks, all of a sudden something starts trending lower, we have to take a step back as investors and say to ourselves, maybe there are other things impacting this market that we are not aware of. Maybe the fundamentals that we know to be true, even though they are true, those things about the Federal Reserve, those things about bailing out the banks, those things about fighting these unwinnable wars, those things can all be true. Yet at the same time, maybe something else is actually going to overpower those themes for brief moments of time. So I arrived at a place of saying, at least as far as investing goes, I am basically at this point a 98% technical based or price based. Another word for technical analysis is simply price analysis. And so, from a big picture fundamental standpoint, yes, I believe that we should go back to, let's say, a currency that is backed by gold. I think we should have a hard currency in the United States and around the world. But at the same time, when push comes to shove, we have to align with what the actual market is doing, not with what we think the market should be doing, not with what 10 other people tell us the market should be doing, but what is the market actually doing? That's And the analogy again is like when I was in the war, I observed that what was actually happening, what I could see with my own eyes, was extremely different from what the news and the politicians were telling me. And so the same thing for the markets. Sometimes what is actually happening in the markets can be very different from what all these other voices are telling us.
Right. And so if we think about today and looking back 2008, with the debt we had then and then now, fast forwarding to where we are to now today, what is it that you see right now that's going on right now in the market that concerns you?
You know, I'm actually I'm actually not that concerned about the overall state of the markets. Despite the wars that are going on now, still in the Middle East and Russia and Ukraine, um, yes, there is a lot of debt in the United States and around the world. Debt levels are too high. Um, but when I look at what is happening concurrent with those negatives, again, I'm not saying that those negatives are not happening. They are. But concurrent with that, we are making tremendous progress as a species. And so I'm actually, even though I invest at this point primarily in precious metals, um, and I started this business in 2015 based on a price analysis. Gold peaked in 2011 just under $2,000 per ounce, and it then lost half of its value over the course of the next 5 years. So from 2011 to 2015, gold fell from just under 2,000 to just above 1,000. You say, well, why? I mean, it's the same price of gold. How could it fall by 50%? During that same period of time, a lot of the gold and silver miners fell by 90 to 95%. So it's not enough to look at these big picture themes and say, therefore, the price of gold is always going to increase. There can be multi-year, there can be multi-decade periods of time where other things are impacting the markets. Um, so I launched this business in 2015, pretty close to the lows, pretty close to the bottom at about $1,045 per ounce. I was early about 3 months. I launched iGold in August of 2015. The actual bottom was in December of 2015. And that was all based on my assessment of the price situation. I said, hey, the price of gold has fallen by 50%. This 1,000 level was really strong support going back to 2008. It was the former all-time high from 2008, right before the financial crisis. I said, all things considered, this is probably a good, window to start publishing research on a bottom in precious metals. Here we are. Gold is more than doubled here in the last 9 years since I started publishing. I'm fortunate to have gotten that call right. I don't get all calls right. I get some things wrong as well, for sure. But I got that major call right, and that call was based on studying the price. That call was not based 1 cent, not one bit on understanding these fundamentals. It was all based on looking at the actual price. How far has it fallen back? Where is it likely to bottom? So just to fast forward to today, I remain heavily invested in precious metals. I still think this cycle has another couple of years left to go in it, but not forever. It is not going to be the story that for the rest of our lives on planet Earth, we should be investing in precious metals. There are going to be times to invest in other asset classes. And I think one of those times is a couple years away. Um, if I look at what's happening concurrent, again, it's not a question of either or, but it's all these things happening simultaneously. So concurrent with the unsustainable debt, concurrent with the unwinnable wars, we have in some huge segments of the economy, we're making incredible strides as a civilization, as a species. I mean, the very fact that we're having this conversation here today live, able to share this conversation with thousands of people around the world, this literally was not possible 10, 12 years ago. Um, that's one major thing that's happening right there. You look at the advances that are happening in medicine, in nanotechnology, the fact that we may have the ability, let's say in the next 10 to 20 years, to really go in on a cellular level and correct problems within our physiology on the medicine level. And it's not to say that everything happening on the medical front is good. Again, it's people are often looking for this binary. It's either all yes, it's all good, or it's all bad. But in reality, what's happening is these multiple currents that are crisscrossing at the same time. Um, so we look at nanotechnology, we look at, of course, artificial intelligence, which, yes, it's gotten overblown and there's a little bit of a bubble in AI stocks right now. But you look forward 10 or 20 years and you think about what may be possible when you combine artificial intelligence with nanotechnology. Then you look at some of the things that guys like Elon Musk are doing in really paving the way for us to become an interplanetary species within the next decade or two. And the closest analogy I can make to that is, imagine if you were living in Europe in the late 1500s, early 1600s, and you have the first rumblings about a new world, literally off the map. Um, And so, yes, there's a lot of problems in Europe at the same time, but there's also this new world that is a couple decades away from being explored. And imagine all the opportunities and the wealth that was created by those first generations that sailed from Europe to the new world. So imagine if we fast forward a couple decades, what are going to be those opportunities for us as a species as we are literally moving outward to the stars? Um, this is to say, so I think one of the ways that precious metals investors need to expand themselves a little bit right now is to really embrace that it's all of these themes happening at the same time. And if they get married to just the negatives, just one theme, just let's say the debt problems, they're going to be left on the wayside as the rest of the world makes leaps and bounds of progress over the next couple of decades.
Right. So what are some other asset classes that you think are going to be part of this evolution of change?
It's going to be it's going to be technology, mostly technology, and then um, as far as the raw materials, excuse me, that are going to be needed to power technology. So the commodities and the raw materials that are needed to produce uh, rocket fuel and batteries, and nanotechnology and advances in artificial intelligence. So I do think that there is a place for continuing to invest in hard assets or raw materials. But I also strongly believe that for those investors who have the proper risk tolerance, I think when we fast forward beyond this cycle that we're in the precious metals, which again I think has another few years to go, I am looking at higher prices for both gold and silver over the next several years. I think after this cycle, though, the real life altering wealth opportunities are going to be in technology, space exploration, undersea exploration, nanotechnology, and artificial intelligence.
You keep saying, the next couple of years, for precious metals. So I'm curious to ask, because you have a strong side on like the technical side, what are kind of like maybe price points that you're looking at, in terms of exiting or taking some profits off the table?
Yeah, so I have an outstanding target for gold of 2,535 in US dollar terms. Um, that target is outstanding. It has not been achieved yet. That target is based on the preceding 4 years of consolidation that the gold market has been in. Gold has been moving in a wide range, about a $460 range for the last 4 years. But as a net sum, it moved sideways that entire period of time. Generally speaking, when a market breaks out to the upside, which it has just done 7 weeks ago, it was only, we only have to go back to late February, and there was a real malaise in the precious metals markets because it had been just this stagnant market for the previous 4 years. But when a market breaks out to the upside from a clear defined horizontal consolidation like that, we have a fairly reliable way of calculating a target for the intermediate term, for the 1 to 3 years following the breakout. And it's to simply take the widest depth of that consolidation for the last 4 years, take that depth and add it onto the breakout point. If we do that from a numerical standpoint, we arrive at that target of 2,535. It's $460 added on to the previous breakout point, which was 2,075, the previous high. Just as a backdrop, there are reasons why that type of analysis works. It works because in that period of time, in that block of time, you have that amplitude of short sellers, hedgers. We're talking mining companies that have sold forward their production at those levels, thinking that the gold price would never break out, wanting to say lock in their sales at 1900 or 1850, saying, hey, that's good enough for now. And so what happens is when the price breaks out to the upside, sequentially, you have all those groups of investors or hedgers or short sellers that were negative on the price of gold. They sequentially begin to cover their shorts and their hedge books, which drives the price up. All things considered, it drives the price up an equal amplitude as the widest part of that consolidation. So I have this outstanding target. We've hit here within the last 2 weeks. We've hit 2,430, which is only $105 away from that target. I don't think gold is going to move in a straight line. I suspect that there's going to be a pullback. Either it's already started or it's soon to start. Gold could very easily pull back by a couple $100 before it then continues upward to achieve that target. Above that target, as someone who, again, I'm not going to side with the stories that I'm being told. I'm not going to side with those analysts, even that are making correct arguments about why the price should go higher or do something. I'm going to side with what the actual market is doing, what the actual price of the thing is doing. And again, it's because I learned my lesson back in the crash of 2008. We cannot listen to stories about the markets. We have to align with the actual price trends in the market itself. Otherwise, sooner or later, we will get clobbered by the markets. So after that target, after we get to 2,535, I think that is going to happen this calendar year. After that happens, I will take a giant step back myself, and I will reassess everything that I am seeing in the precious metals markets. Not only the price of gold, I'll look at where is silver trading, where is the gold to silver ratio. Does that still look like it has more to compress in favor of silver? If that's the case, gold could keep rising. How are the mining equities trading? What's happening to the US dollar? What's happening to the Dow to gold ratio? I'll take a look at all these things once we start zeroing in on that target. And I'll try to ask myself, do we have data-based evidence to suggest to us that this wave could continue at that point? That's what I will do. I like to take the markets in measurable chunks like that and not fast forward more than, let's say, 1 to 3 years.
Yeah, I think that's good because then you're also covering your blind spots, right? You're also reevaluating your thesis, thesis in terms of even like what are the charts telling you, right? All that information of the psychology and human action. I feel like a lot of millennials or a lot of investors in general, it's still crickets about, the precious metal space. Do you think that is true? And if it is true, when do you think there will be more interest in the space of not just gold, but as well as silver, where it will outperform gold?
Yeah. And that sentiment type of discussion is really interesting as well from a big picture standpoint, looking at when the sector might top. Uh, what you just noted there, Ben, that the younger generation is really not all that interested in precious metals yet. That definitely applies to most generations of people, I think, in the Western world right now. Um, and we need to be contrarian about understanding that type of sentiment reading. Um, when we get to the point where a lot of your colleagues, a lot of your peers in your social groups from outside of the precious metal sector now, people from your larger walks of life, let's say, when you start to get to the point where you have 10 or 20 of those people coming up to you and saying, hey, I know you've been investing in precious metals for a while. I'd like to get started. Can you point me in the right direction? I'm not saying not to help them, uh, but I am saying when you start to get that where it's a couple dozen people, and trust me, that is going to happen as this cycle matures. The warning bells should be going off in your mind, and this is definitely going to happen to me too. I saw hints of this at the 2020 peak in 2020 when gold moved from about 1400 up to 2075 in 1 year. Quite a dramatic move, over $600 higher. All of a sudden, I had this huge flood of interest come in. I'm talking within the last 3 months of that move. And what happened then at that point, that coincided with a 4 year peak, right? Gold then consolidated for 4 years after that. So we're not there yet, but we want to be paying attention to those signals ahead of time. And it's going to be observable. It's not going to be a question of, hey, am I seeing more interest in the message boards or in the comments section of certain videos. It's really going to be people in everyday life. When you go out and you're going to the gym or you're going to do exercise or you're going to a bar or a coffee shop or another hobby that you have, it's going to be when those types of people start to show sustained interest for a number of months, we're going to need to be careful at that point.
When we think of like narrative economics, there's not much strong narrative right now going on, right? Which is why a lot of people aren't really looking at the space right now. I find it interesting though that you brought up that example, and I've heard you talk about on other interviews before, where in past, similar circumstances, people have come up to you and literally asked, hey, like Chris, where should I invest? And there's a buzz all of a sudden. But what I'm trying to get at with this question is, do you think also narrative economics is playing a huge role where, because of social media, which is a whole different game compared to, let's say, decades ago, um, that people are having trouble with making smart investment decisions and instead they're chasing trends?
I think that that's been an issue since the dawn of investing. If you go back a couple centuries and think about some of the bubbles that developed, the South Sea bubble is a famous one when European ships were sailing to the southern continents and it was opening up these huge new markets for trade, and there developed a massive bubble in the South Sea company, a shipping and mercantile company. You think about the lack of information that investors then must have had, where you're thinking about investing in the development of this new continent, these new trade routes that most people just couldn't even see firsthand. You couldn't actually witness it. Um, and if you wanted to, it would require a 6 month journey on a ship in which you might die or develop some sort of a disease. Yet people were investing in this theme, and it became a huge bubble at the time. That's with a real lack of information, and any information they had would have taken months to get back to the mainland, to Europe. So I look at the landscape that we have today, and I say, um, there's nearly infinitely more information than we had in previous cycles. Generally, I think that's a good thing. This conversation today, the fact that people can participate, can listen, maybe this can spark some new ideas for some investors. I think that is a good thing. But with that good thing comes the pitfall of, yes, all the noise, um, the meme stock investing is a very interesting phenomenon that I've observed here over the last number of years, where you'll have people with uh, quite a following on social media just make a cartoon drawing of a dog next to some ticker of a stock, and that stock will shoot up, 20%, or it'll double overnight. And then inevitably these things come crashing back down. But it's a very interesting phenomenon, but these I don't want to call that necessarily a scam, but these meme investing, trends are generally not sustainable over time. And there have been scams and misinformation, prevalent in the market since the dawn of time. So I just think it's part of the process. It's the version of it that we live through today. It sort of exaggerates things in each direction, but it's how life is today. So we have to make the best of it.
I appreciate that answer. And it makes me actually think like, when we think about, all these narratives and how it can have impact on our psychology, something that I have used is I'm a big fan of, Charlie Munger's work. Pretty much he gave
Mm.
a speech in 1995, on the psychology of human misjudgment. And he was huge on mental models, right? And so a question I'm curious to ask you, you're able to take a lot of the time, your emotions out of play because you understand the technical side, and that's a skill set that's really great that you have. But what are other aspects of, let's say, behavior economics, in terms of mental models that you use, to make smarter investment decisions?
One of the first books that I ever read on behavioral finance was called "Devil Take the Hindmost," and I believe the subtitle is "The History of Financial Speculation Throughout the Ages." And I read this book in 2004 or 2005. I'm forgetting the name of the author at this moment. It's somewhere on one of my bookshelves. Um, but I read this in 2004, 2005. It's sort of in this period of time. I was a year or two out of university, and um, I started to observe with my own eyes the mania that was brewing in the housing market in the United States at that time. Housing prices had doubled in a couple years, uh, and I remember going into work at that first military analysis job that I was doing in Washington, D.C. And so here I was, 24 years old, entry level government salary. You're barely making ends meet. I'm living with three roommates to afford to be able to have a roof over my head at the time. Um, and there I was, I would go into work, and I remember my coworkers would be talking, and they would sort of have this this look on their eyes, this like really intense look, like this, like, I just need to buy a condo, right? And that was the lunchtime discussion going on for months and months and months. I'm trying to buy a condo. If I can just buy a condo, it's going to double in value in 2 years. I remember this going on, 2004, 2005. Um, and I don't know, maybe it's my nature as a human being. personally, or I don't know what it is. I don't know how I became this way, to be honest. But whenever I see a group of people all behaving in one direction, I don't want to say that I always go in the opposite direction. For example, I wear clothes when I go outside, for a walk. I pay my taxes like most people do. So I'm not a contrarian just for the sake of doing things opposite of most people. But I do, whenever I see like a herd of people or a group of people moving in one direction, I at least always take a major step back. And I at least always say to myself, okay, yeah, I see 98% of the people moving in that direction. Is there some reason that maybe I would want to not do that? Or is there some reason that I should maybe just stay where I am right now and just see if that group think is really leading in a positive direction? Uh, this is just how I am. Um, so at the time, I remember, yes, in the beginning when I was exposed to these conversations, 2005, about the housing market, I'm sure for a couple of weeks in there was a side of my brain at the time as a 25-year-old that was saying, yeah, I just need to set aside $5,000 for a down payment, and then I'll buy a condo like everyone else. And then in 2 years, I'll be rich. But after a couple of weeks, um, I started to really look into it more and say, what is actually happening here? Why are people acting like robots and all moving in this one direction? Um, and this book, Devil Take the Hindmost, really is about 10 chapters, and each chapter is a history of financial manias throughout the last 1,500 years, going all the way back to some of the initial manias. We talked about the South Sea bubble, the bubble in 1929, the stock market crash of 1929, the railroad bubble that developed in the United States in the 1940s and the 1950s as they were working on the Transcontinental Railroad. All these different manias that develop throughout the ages. And there is a common set of behavior that human beings develop around these manias. There's a common sense of groupthink. There's a belief that an asset class is revolutionizing the world, which may be true. This is the difficult part. I mean, think about the advent of the railroad or the advent of the internet 25 years ago. It did revolutionize the world, but that doesn't mean that the asset prices of the companies involved can only go higher in a straight line. It's that belief that something can only go higher, that there's no possibility of it going lower. That mindset multiplied by the majority of the population is what leads to financial manias and then collapses throughout history. Um, so I became very interested in that as a theme. That was really the first major macro theme that I started to look at, which eventually led into understanding about the world of global economics, the banking system, fiat currency, and the Federal Reserve. But at the time, I thought it was more isolated. I was just observing the housing market in 2004, 2005. Um, so if there's one thing that I can say, the one common uh, trait or footprint, we can call it a footprint in the same way that we can be walking through the woods and we can see the footprint of a rabbit or the footprint of a deer or a moose. And we can have a fairly reliable way of saying, yes, I don't see that thing right here. That animal is not here with me, but it's somewhere. It's somewhere close. We have that ability by studying footprints. There is a footprint of financial manias. There is an observable footprint when one is studying price action, price behavior, which is what I do. Um, and that footprint is you take a major step back, you look at a multi-year, but even better, multi-decade chart of whatever the asset class is that you are concerned with. And if that chart is, let's say, moving in a sort of slow and sustained rise, right? Like 2 steps forward, 1 step back, 2 steps forward, 1.5 steps back. Nice orderly kind of rise. That's the signature of a healthy market. That's the signature of a market that is growing, evolving over time, digesting its gains. There are excesses, there are corrections along the way. Some businesses thrive, some businesses fail, but the trend is solid. That's the signature of a solid trend. When a market develops into a mania, you will see that set of price action, that orderly, slow rise over many years or many decades. You will see that take on a parabolic price trajectory. In other words, when you zoom the chart out, that chart will go from an orderly rising trajectory to a near vertical. It'll be that hockey stick analogy, the hockey stick for you Canadians up there. When the linear curve takes on the parabolic trajectory, the curve of that hockey stick on a longer term chart, that is telling you that the psychology of the market has shifted to believing that this market can only go higher, that something has changed with the fundamentals, and that therefore this market can only go higher. And when the majority of the people out there believe that this market can only go higher, ironically, that tends to be the moment, plus or minus a brief window of time, when that market can in fact only go lower. It's the opposite of what most people believe when they're subscribing to that group thing. So I would say from a behavioral standpoint, pay attention to that footprint or that signature that appears on the charts of when an orderly market becomes disorderly or parabolic to the upside.
Besides having mental models, I really think when you look at some of the greatest investors that have ever lived, they have their own rules that they like follow. What are some investing rules that you stand by, that it's a non-negotiable and that you follow?
There's two that come to my mind. Um, and by the way, I do long-term investing and I also do short-term trading. And I don't think they're mutually exclusive. You can do them both concurrently. You just have to segregate in your mind. These are my longer-term investments. This is my short-term trading. And even better to do them in separate accounts, by the way, so you don't get the funds mixed up. But as far as long-term investing, one rule that is non-negotiable is I will only buy companies that have been basing for a period of time. By basing, I mean moving sideways. So the price chart must be moving sideways for at least a number of months. The longer, the better. Several years is even better. It needs to be moving sideways in a range. And yes, there can be some volatility within that range. I only buy companies where the price chart has been basing like that for an extended period of time. If you show me, and I get pitched companies all the time because, at iGold Advisor, we have a service called Elite Private Placements, and we have a group of investors from around the world, and we pool our money together and we invest in these mining companies, right? We raise a couple $1 million for them several times a year. And I get pitched ideas all the time. I have people coming up to me saying, hey, can you help us raise money? Hey, can you invest in our company? And many of the ideas that cross my desk are companies that have already not entered that parabolic stage, but let's say they've already risen. They've already had 2 steps forward, 1 step back, 2 steps forward, 1 step back, and 2 more steps forward like that. So they're already well off their lows. I look at a chart like that and I say to the company, hey, congratulations, you're doing well. Keep doing it. But I'm not interested in investing at this stage. There's too much risk. When a company has already left its long-term base, its long-term sideways price action, there is inherently too much risk. There's too much of the gain that has already been priced into the stock. Ironically, that's when companies have already moved notably higher like that, it tends to be when most people are interested in buying the stocks, and when the news is actually really good, the news is actually supportive of the stocks at those times. It's in the base when a stock has, let's say, come down significantly, and then it stops coming down and it's moving sideways for 6 months or a year or 2 years. That's when most people are not interested in investing, and the news actually tends to be, let's say, mildly constructive about the company, but nothing earth-shattering, right? They're paying the bills, they're doing some drilling, they're expanding their footprint, of holdings, but they haven't hit anything big yet. They haven't developed a new mine yet. Those are the companies that one wants to invest in, the basing. But there's a huge caveat, which is if that base starts to break down and the company starts to make new lows, let's say new all-time lows, then it violates the model to the downside. Then it shows something new, negative is really happening with that company if the base is broken. So the longer the base, the better, but one has to stay on top of it, because sometimes you will have companies that start to make new lows after the base is forming. That's then a major red flag. Often, if that happens, what you're going to see is a reverse split. They'll consolidate the stock, they'll raise more money, and then the stock will begin to drift lower again. So you can lose a lot of money if the stock begins to break down. The longer the base, the better from an investment standpoint. Um, that is a non-negotiable rule in our investment book here. And again, I can't tell you how many times that I'm pitched companies that have already had these major moves. It happens all the time. Um, and if I could give one rule from a trading standpoint, from more of a short-term trading standpoint, if one trades individual stocks or futures or options, or ETFs, whatever it is, keep that endeavor separate. Remember that's an activity. It's like a business. It's like something that you have to do full time. If you're trading, you have to stay on top of it. It's an activity. It's not a passive investment. And one of the keys to successful trading on a short-term basis is that when one has a successful trade, let's say in your trading account, you have $10,000 and one has managed to double that to $20,000, and you have a really nice gain over a short period of time. The key to long-term trading is to pay yourself when you have a successful trade. So in other words, take some of the profits out of the account entirely and crystallize it into something that you can't blow up with the wrong press of a button. So take some of those profits and crystallize it, let's say, to physical precious metals, real estate, other long-term investments. That's up to you. But that discipline of, let's say, taking 50% or maybe a third of the profits out of the account, basically every time that you have a successful trade, it will guarantee that when you have a wrong trade, which will happen, this is the thing to remember about trading. You only have to be right greater than 50% of the time to be a successful long-term trader. You only have to get things right 51%, and keep repeating that. And you do that, and over the course of several years, you're going to be making consistent profits. But that 49% of the time, when one has a bad trade, if you have kept all of the profits of the previous trade in the account, it guarantees that when you have that loss, In trading, we know that we are going to have bad trades. It's not a question. We will. Everyone will. It's guaranteed that you will have a bad trade, just like certain days you wake up and the weather is bad. It's just how it goes. If you keep all of the profits in the account every time you have a good trade, it guarantees that when you have a bad trade, you're going to lose that percentage of a larger capital amount than your previous good trade was. And so it's very easy in trading to take 2 steps forward and 2 complete steps backward, and basically to make no progress over a period of time. Every time you have a good trade, take at least a portion of that and crystallize that in some sort of long-term way, and you will guarantee that you're building long-term wealth at the same time as you're engaged in the activity of trading.
What do you think makes a great investor if we talk about an investor right now?
The ability to act as a contrarian, the ability to step back, um, and to act as a contrarian, both in the wider context of society, what are most people looking at, and therefore what are most people not looking at, but then also the ability to act as a contrarian even within the smaller theme of what most people are not looking at. Even within that theme, what are, what are the majority of the small segment not looking at? That is very difficult to do. I don't do it perfectly every time either. We are hardwired as human beings to learn from one another, and we should. We're hardwired to want to act as a herd, to want to all move in the same direction. It's important from a biological perspective for our survival as a species when we look through the last several thousand years. However, when we're talking about making decisions on assets from a price perspective, that that behavior actually works against us. If we succumb to the pressure of moving in the same direction as the herd, sooner or later we will get we will get hurt. So we have to think as contrarians, uh, you know, bigger picture and micro.
Who are some of your greatest mentors, that have really had an impact on your investment career?
A lot of the technical analysts, I will say John Murphy, uh, is a technical analyst who wrote what's often referred to as the Bible of technical analysis. It's called simply Technical Analysis of the Financial Markets. Big book. It's really a high level overview of um, how to think about markets from a price perspective. Um, Definitely John Murphy, and the other guy is he's kind of a lesser known character. His name is Stan Weinstein, and he wrote this book back in the 80s, which looks really dated, but it's one of the most influential books that I've ever read on my career. It's called How to Profit in Bull and Bear Markets, again by Stan Weinstein. Um, and it looks sort of sensational when you look at the cover. And again, it's dated. I don't even think they've come out with a new version, and the original version was printed in like 1985 or something like that. And so the charts are really grainy in the book, and you really have to look closely to see what he's talking about. But I learned so much of the strategy of how to invest in stocks. For example, this theme of only buying stocks that are in basing patterns. I learned from Stan Weinstein. And then also how to look at the cycle of markets. Basically, if you can simply avoid buying stocks that have already had significant moves higher, he would call a significant move higher a stage 2 advance. 4 general stages in markets: stage 1 being a basing process, stage 2 being the advance, stage 3 being a topping process, and stage 4 being a decline. If you can just not invest in the companies that have already had a stage 2 advance, if you just take those off the table, you automatically start to stack the odds in your favor. Anyway, yeah, that book by Stan Weinstein. It's really good, but you have to take a leap of faith in order to read it, because if you judge that book by its cover, it'll look a little bit dated.
I appreciate those two names, just for people that are curious about, how you learned or how you stayed motivated, to get better on the technical side. And, a question that I'm really curious to ask is like, your why. Like, why are you so motivated right now? You figured out how to make yourself financially sovereign and you continue to, manage, your risks and protect your wealth. But why are you so motivated, to help others financially?
Yeah, this is actually a real key point. Um, Money to me is a means; it's not an ends in and of itself. And I've noticed in myself, I think we all do this from time to time, where we pursue money as the end in and of itself. And I actually feel very little motivation from that. Um, Money is a means to an ends, and so investing and trading in these lessons are all attempts to allow us to regain control of our own sovereignty as human beings. This is the key point that motivates me. Um, we do need a certain amount of resources as human beings and as individuals to do the things that we want to do in this world, whether it's having certain experiences, whether it's inventing and advancing our progress as a species, whether it's helping others, whatever it is that one wants to do. Maybe it's all of those things. You do need a certain level of resources to do that. I mean, I have spent a decent amount of time in monasteries over the last 10 or 15 years, sometimes needing breaks from the financial world and the working world. And I have a few friends who are monks actually, and I stay in touch with them. Um, and that is an absolutely valid path in life, I feel. Uh, to take that path, or to live in poverty, or to decide to pursue charity in ways like that. It absolutely is, if one wants to do those types of things. However, if one wants to uh, have more of an impact on the material world, let's say in advancing our capacity as a species, in helping us to develop new technology, and helping us to literally explore new planets over the next couple of decades, uh, then one does need a certain level of means, a certain level of resources. And so to me, investing and trading are ways where, if one has chosen that path of wanting to make an impact on the tangible world that we live in, that's what investing and trading is to me. Uh, and I think that there are groups out there uh, who have as their goal trying to stop us as a species and as individuals from expanding, from growing. Um, I think not everyone working for the government or the central banks fits into this category. I have a lot of friends still from the military, people that I would trust very much, people who were well-meaning in that group. But I think when we look at some of the control structures behind perpetual warfare that we have been engaged in here in the West, especially in the United States, really, if you look at the United States since World War II, it's been Korea, Vietnam, Central America, Iraq, Afghanistan, Iraq again, and now we're getting involved here in the Middle East and possibly in Ukraine. We've been at war as a country every decade, pretty much since World War II. Um, and I think some of the, if I dare use the word intention, some of the intention behind the continuous war, and then also the inflation that is inherent with the system of central banking as it exists in this country, is to siphon off wealth from individuals. Um, War is extremely inflationary. Printing money, of course, is inflationary, whether it's used for war or for bailing out the banks or whatever special interest groups are going to receive that money. And inflation is a tax. It's a tax on all of us, but most importantly, it's a tax on the poor and the lower middle class. Those people who are unable to accumulate assets that actually rise in value from the inflation, those are the ones that are really kept running on the hamster wheel of the 9 to 5 reality, barely able to make ends meet because their raises at their jobs are not occurring fast enough to compensate for the increase in the cost of living, the inflation. Um, and when one really starts to look at uh, the policy of central banking, the way that this inflation is ingrained into the system, it's inherent with the system, one begins to say, there's a reason for this. One of the reasons, I'm not saying the only reason, but one of the reasons for this inflation is clearly to siphon off wealth from one segment of the population and redistribute it to other segments of the population. And the way that I look at that is that there is a control structure um, that is trying to suppress our collective capacity, our collective potential as human beings. Um, and so I believe that it is incumbent upon us. It is critical that we develop at least sufficient means. Again, unless one wants to, spend the rest of their life just living in the woods in nature or becoming a monk. And again, nothing against that for people that choose that path. But if we want to have this impact on the tangible world, we have to have a certain level of means in order to do worthwhile things in this world, including making this world a better place. Um, and so I really see the skill of investing and trading and learning about these realities as a skill that serves us for the rest of our lives. And coming back to what you said, Ben, um, allows us individually and then as a group, allows us to basically regain sovereignty, regain control of our own lives, uh, and really to wake up every morning, put our feet on the earth and saying, here I am as a being on planet Earth. What would I like to do with my time here? Not what is anyone else telling me to do, but what would I like to do with my time here? And having the means is one necessary step to allowing one to come to that place of being able to move about the planet in a deliberate kind of way. So yes, that is my, you know, that's my ultimate motivation. It's not money in and of itself. We need some money, but it's about what that grants to individuals.
Yeah, and also allows us to not be limited and live out our potential. And I'm curious to ask you, like, I know for you, there's other aspects of wealth besides your financial wealth that you're passionate about, right? So, what are some other areas of wealth that, being financially sovereign provides for you, for example?
Health. Health, and actually, I put I put health first. If you don't have your health, then no amount of money in the world really matters. Um, so I feel like health comes first, and then from that, wealth typically grows. And yes, there are some times in our lives where, hey, I need to burn the midnight oil, right? I've got a report. It's got to be published tomorrow. Okay, I got to pull an all-nighter. My sleep needs to be sacrificed here for a day or two. Yeah, sometimes we have to make sacrifices like that. Uh, but health, and then I really find that I feel most healthy when I have, let's say, regular contact with nature in some sort of way. When I can spend time out in nature or in the woods or by a lake or a river or the ocean, that helps bring me back to, I think, a deeper level of reality about the greater picture of what we are connected with here on planet Earth, and therefore what the things that we're doing in our work lives, what those are really all about.
I respect that a lot. And, you know, what is your definition of greatness?
It's having the ability to move about as a free human being on planet Earth while we are here. Free human being, sovereign, able to make decisions for oneself and then impact the world.
And where do you see yourself in the next decade impacting the world?
I would like to finish up this cycle in precious metals that we've been in since 2015. I want to help investors to navigate the final stages of this cycle as I see it. And then I'm going to be transitioning myself into investing into some of those other themes that we talked about the progress and expansion that we are going to be making as a species over the coming decades. Um, that's what I intend to be doing on the business front. Um, However, one of the ways that I would like to be able to give back is actually working with veterans who suffer from PTSD. It's something that I struggled with back when I got back from Afghanistan for a number of years there. Um, and there was a period of time in my life where I didn't know how I was really going to round up from that dark night of the soul that I was going through. And I had some help from a number of different people, number of different entities. Um, and I'm thankful for that. And there are a few practices that I learned in that period of time for myself that I know are applicable and that will help other veterans who are in a similar kind of space. So that's one of my goals here for this period of time. Um, whether I do it concurrently, whether it happens, let's say, after I start tapering back the amount that I'm spending day to day, focusing on the markets, that remains to be seen. But it is one of the ways that I want to give back and make an impact.
That's beautiful, man. Well, I'm really excited to, see how those both play out. Now that you have a good feel of my show and what it's all about, in terms of not just, achieving greatness or, overall health and well-being, who is someone that you know personally that you love to see on this show?
I would love to see you talk to someone who is on one of the spiritual paths that I mentioned, such as a monk or someone on an alternative spiritual path of that sort, because I think that decision, that world outlook, um, it's not what I've chosen for myself, but it's extremely valid. It's an extremely valid thing if one comes to that point of saying they want to pursue that direction. And I enjoy I would enjoy hearing your conversation with someone who has made that choice.
It is a desire of mine to also pursue more of the spiritual wellness side as well. So, Chris, something that I want to ask you is, where's the best place for anyone tuning in right now to go to your work and follow you?
Yeah, well, all my work is on the letter I and then goldadvisor.com. And you can also follow me on Twitter or X. The handle is at iGlobalGold. And I post there a couple times per week. In this cycle that we're in, it tends to mostly be about the markets and precious metals. But given my background in the military world, when I see things of note that I have a perspective on, I do post there as well. And I think after this cycle is over in the markets, I'm going to use that as a platform to be posting about some other topics that I find worthy.
Well, I really appreciate your time today. Had a blast, honestly, hanging out with you. And before we, sign off, are there any last words that you want to say?
We want to be sovereign individuals on planet Earth. We want to look at the world with our own two eyes and make decisions for ourselves. Yeah, it's good to stay informed about what's happening in the news and from what other people tell you, but I've experienced myself in so many different facets that we have to see things for ourselves. So I really encourage people to do that, to look at the world with their own eyes.
So let's end off with those words right there. Thanks again, Chris.
Thank you, Ben.